I'm Alan Kenny, Editorial Director with REIT.com, and we're at the Wynn Las Vegas for REITWorld 2015, NAREIT's annual convention for all things REIT. Joining me is Gilbert Menna, Partner and Chair of Real Estate Capital Markets with Goodwin Procter. So Gil, based on what you're seeing, are the REIT privatizations slowing down, or are we just getting started?
It's a good question. I would say perhaps just getting started, but not to be compared with 2005 to 2007. There were 30 going private transactions in that period with well over $120 billion of value. I think the inflow of sovereign capital, obviously the amount of capital raised by Blackstone. Blackstone is on the other end of at least 3 of those privatization transactions recently. Starwood Capital bought Landmark, a small company, and then bought 20% of EQR's portfolio. Obviously, there's a lot of private capital that's very interested in being efficient, and privatization of REITs is a great way to buy portfolios efficiently. So I'd say it's just beginning. I think it does depend on what happens with the Fed, but after perhaps one rate increase in December and a more calming environment, we'll see more privatization transactions.
And you're involved in a lot of these transactions, so I'm wondering, are there any consistent issues or sticking points that seem to be coming up during these deals?
No, a privatization transaction obviously puts the board on the spot. The question for the board is, should they, especially in an all-cash deal, should there be a termination of the value, of the future value and the future upside for the shareholders? So that is prevalent in any privatization wave, whether it be 2005 to 2007 or whether it be currently. I do think that this is a smaller version of what we saw in 2005 and 2007, won't be repeated, but the legal issues and some of the substantive issues are still there. An interesting transaction from an industry perspective, in my view, is the Hudson Pacific transaction. There, Blackstone decided to invest in a non-controlling situation with Hudson Pacific going forward, with the platform staying in place, and the future upside for the common equity holders existed in that transaction. So I think the question really that we have to ask ourselves in the boardroom is, with NAVs and REIT NAVs as depressed as they are, is now the time to take a company private? That's been around for a while and will continue.
Now, you referenced foreign capital earlier. Can you speak to us a little bit more about what's been going on, how that's impacting the market in these deals?
It's another good question. Just Starwood Marriott. Certainly we know that, we at least rumors suggest, and I'm sure that when we look at the background section of that transaction, that there was some Chinese offshore capital, probably other foreign capital associated with that. We also don't realize that when Blackstone buys out a private REIT, or Starwood goes to take out 20% of EQR's portfolio, there's a lot of foreign capital there that's investing with those platforms. And I think that the allocation by foreigners to real estate, foreign wealth, sovereign wealth funds, and institutional investors is increasing. It's not decreasing. So I think that we're likely to see more broader-based global capital attracted to U.S. real estate.
Well, thank you so much for your time, Gil.
Thank you.
For more from REITWorld 2015, check out REIT.com.